Right now, as the market is open and trading, Lithium Americas, ticker LAC, is at $6.80, up about 8 cents on the day, a gain of around 1.19%. The volume is steady as investors continue to digest the massive, transformative news that has completely changed the story for this company. The immediate expectation for many people just glancing at this stock is that it's another small, speculative miner moving up and down with the volatile price of lithium. The reality, however, is that this stock is now one of the most significant, de-risked, and strategically important raw material projects in the entire United States. The narrative you might have had about this company even a month ago is now obsolete. The recent confirmation of its $2.23 billion loan from the U.S. Department of Energy and the first major drawdown of $435 million just last week is not just a small update. It's the final validation that shifts this from a hopeful project to a funded construction site. This isn't a maybe anymore, it's a when. For years, the common belief about LAC was that it was a high-risk gamble. It was a company with a great asset, Thacker Pass in Nevada, but it was tangled with an asset in Argentina, and it faced an ocean of uncertainty over funding and permitting. Many investors, particularly those doing self-investing, looked at the stock and saw a binary bet. They see the EV trend, they see the demand from producers like Tesla stock, and they think lithium is the pick and shovel. But they were paralyzed by the financing risk. The reality was that until this project was fully funded, it was just a promising piece of dirt. That expectation of high risk and uncertain future is what kept this stock trading in a range, held down by short sellers and cautious funds. But that expectation is now clashing with a new reality. The U.S. government, alongside General Motors, has effectively stepped in and said this project is too important to fail. This fundamentally alters the equation. Let's look at the recent movement and what is driving it. The stock's modest gain today is just part of a much larger story. The entire investment case for LAC was solidified on October 20th, 2025, when the company received its first $435 million from the DOE's $2.23 billion loan. This is the catalyst. This isn't some minor corporate news. This is the final starting gun for the full-scale construction of Thacker Pass. The market is now repricing the company, moving it out of the speculative explorer bucket and into the developer-producer bucket. The risk profile has collapsed in a good way. The question is no longer, will they get the capital? The question is now, how fast can they build? This is why you're seeing a floor form under the stock. The daily swings, which used to be purely tied to lithium spot prices from China, are now being buffered by this massive fundamental development. This is something that many traders using the Robinhood app or the SoFi Invest platform might miss. They might see the ticker and trade it like any other commodity play, but they'd be missing the huge structural shift. This is a stock that requires more than just a glance at the chart on your Fidelity mobile app. You have to understand what this backing means. General Motors isn't just a customer, they are a 38% joint venture partner in the project. They have a $650 million equity investment and an offtake agreement for 100% of the Phase 1 production. This combination of the largest U.S. automaker and a multi-billion-dollar federal loan is an economic fortress. This isn't like buying a broad-based Fidelity ETF or one of their Fidelity mutual funds to get gentle exposure. This is a highly concentrated bet, but it's a bet that is now backed by two of the most powerful entities you could ask for. For an investor using interactive brokers, this is where the real analysis begins. They're not just looking at the stock, they're modeling the construction timeline, the cost of capital, which is now incredibly low thanks to the DOE loan, and the future value of the offtake agreement with GM. This is a complex investment that has suddenly become much clearer. The macro pressure, of course, is the lithium price itself, which has been weak. After the massive spike, we saw a prolonged downturn as new supply came online. This has hurt all producers and developers. But LAC is now insulated from this in a way that its peers are not. It doesn't need to go to the open market for financing in this weak price environment. It already has its $2.23 billion. This allows it to build through the cycle. While other companies are shelving projects, LAC is pouring concrete. This is a massive competitive advantage. The expectation is that low lithium prices hurt everyone equally. The reality is that low prices crush companies with weak balance sheets, while companies with full funding, like LAC, can use the opportunity to build a massive, low-cost asset that will be ready for the next upswing. This is a stock that is no longer just a play on lithium prices. It's a play on domestic supply chain security. For those who are new to the story, what is Lithium Americas now? Following its separation in 2023, the company split into two. The Argentina assets were spun off into a new company. The ticker LAC, the one we are talking about, became a pure play on one single asset, Thacker Pass. This project, located in Nevada, is the largest known lithium resource in the United States and one of the largest in the world. The business model is to build a massive open-pit mine and a processing facility to produce battery-grade lithium carbonate on-site. It's a claystone deposit, which is different from the brine operations in South America. For a long time, this was seen as a technical risk. The new validation from the DOE's technical review team effectively silences many of those concerns. The company is no longer just a concept. It is the cornerstone of America's plan to build a battery supply chain that is independent of foreign sources. Looking to the future, the script is written, the funding is secured, the primary offtake partner is locked in. The new expectation is for a smooth construction period. The new reality that investors must watch for is execution risk. Building a mine of this scale is an incredibly complex engineering task. There will be delays. There will be challenges. The focus for investors should shift from watching lithium prices to watching construction milestones. Is the acid plant on schedule? Is the mining fleet being delivered? These are the new catalysts. The company has guided for production to begin in the second half of 2026. Every update that confirms this timeline will add value to the stock. The risks have not vanished. They have simply changed. The risk is no longer financial, it's operational. This is the kind of stock that many people doing online investment or online investing look for, but it's crucial to understand what you own. You're not buying current cash flows like you are with Apple stock or Nvidia stock. You are buying a 3-year construction project. The platform you use, whether it's the Fidelity trading platform, Robinhood stock trading, or the SoFi trading platform, is just the tool. The real work is understanding this fundamental shift. Many investors might be better served by an intelligent portfolio or Schwab Intelligent Portfolios if this kind of single stock risk is too much. But for those doing self-investing in an individual brokerage account, LAC represents a unique, high-stakes proposition. This isn't just another name in a list of SoFi stocks. This is a strategic national asset. The analyst community is still catching up. The consensus rating has been hold for a while, reflecting the old reality of high risk. You will likely see a wave of upgrades as analysts rerun their models with the DOE loan's favorable interest rates and the full funding. The new price targets will have to account for the fact that the project is, by all measures, happening. This is no longer a question of if. This is why investment help is valuable, to help separate the old narrative from the new one. This isn't like looking for investing sites that promise quick gains. This is a long-term investment in American infrastructure. This is what Fidelity Investments and Fidelity Brokerage Services are built for, to give you the tools and research to understand a complex story like this. Even on platforms like Robinhood, with its Robinhood investments and Robinhood fractional shares, an investor can take a position, but they must understand the long-term nature of this. This brings up the central question for the project's future. I want to know what you think. Comment below. Do you believe the U.S. government's backing of Thacker Pass is more about a clean energy future, or more about national security and breaking China's supply chain dominance? Let me know your perspective. So, to summarize the new case for Lithium Americas, the long-held expectation was that this was a high-risk, speculative mining stock, entirely at the mercy of volatile lithium prices and a desperate need for capital. The reality, following the $2.23 billion DOE loan and the $435 million first drawdown, is that LAC is now a fully funded, de-risked, strategic construction project. It's backed by the U.S. government and General Motors, and it is on a clear path to becoming North America's largest lithium producer. The risk has shifted from finance to execution. The stock is no longer just a bet on lithium, it's a bet on American engineering and the absolute stated policy of the United States